Good evening, everybody. Let's begin. This is an easy one for me to prepare, sort of. Some of the presentations I do are, I guess some people call them softer topics. I think they're the most important topics. And I always really kind of struggle, I mean, not struggle, but I really put a lot of time into them trying to figure out, how to phrase things in the wording and give good examples of everything. Tonight's pretty easy though. I mean, this is a presentation everybody likes. You just look at some trades, try and learn from that. I don't think it's necessarily the most helpful. I'm going to explain that on a couple slides from now. But it's easy for me to do. Prepare some slides. I kind of got the forms all set and just get going. It's a little complicated. Sometimes I make some mistakes, but if I make any mistakes that you see, let me know. So let's get right to it. You should have a slide up that just changed. This is what was emailed to you, so I'm not going to read that for you tonight. What I do want to say, though, is this. Everybody likes trade review. Somebody emailed me last week after the last event. The last event is posted. I was a little late on it. It just came out this morning, and it was from 2 weeks ago. Typically, it's out that following weekend, but it just went out yesterday. It was a good one for you to watch. I'll have it on a slide at the end. But after that one, somebody emailed me a really nice complimentary email saying, I just love these presentations. And he felt that they were very much philosophical. I believe that was the word he used. I'll have to go back and look at the email. At least that's what I remembered. And he said, you're not really going to learn to trade from it, but then again, that's not the purpose, and I understand that. And he's right. I mean, the exact details of learning to trade are not really all that hard. That's what you learn in the seminar program. But the mindset is what often is so important. The understanding of what to know, what not to know, what to look at, what not to look at, what to be thinking. So that's what a lot of these are. Tonight, however, is more of just a hard look at charts. I'm going to just go slowly through 4 trades, and on every trade, I'm going to try and remember and hold me to this to talk about how I got it. In other words, I look at about 1,200 stocks every night to day trade. And don't get scared if it takes me like 20 minutes. It's not a big deal. And if you're new and you're wanting to learn, you don't have to pick that many. You can just start with 100 to look at or something, or follow along in the trading room to start with, whatever you want to do. But I want to make sure I kind of explain to you how it got to my screen, because that's quite a process when you think about it. Here's 1,200 stocks. You end up maybe, I email out to you guys in the trading room, maybe 30 of them. And then I end up with, between 4 to 6 on the hot list in the morning. How do those 4 make the cut out of all those stocks? Well, I want to make sure to talk about that. And then I also want to make sure I kind of discuss after that the most important thing, which is really the entry. Did I do the right entry in what I did? I mean, not all these are perfect. These are 4 trades I picked. They're all good trades. All things that I like, that I had something to say about them, something to maybe talk about, educate, discuss, brag about, whatever you want to call it. But they weren't all perfect. You rarely do any trade absolutely perfect. There's always something you could have done better. There's always good and bad in each one. And of course, in the management in general, on each one of them, which is often critically important. I want to explain what I did on each one, why I did, whether in hindsight it was correct or not. And that doesn't mean it was necessarily wrong at the moment. I mean, it's easy to look at a chart at the end of the day and say, woulda, coulda, shoulda. I have a lot of sayings about that. And that sometimes it's helpful, sometimes it's not. If woulda, coulda, shoulda is helpful because it directs you to make a change that makes you better, that's good. Or if it discovers a mistake that you made from what you should have done, that's good. But to just sit there, all day, all night, all the next day going, oh, I could have done this, could have done that, could have done that, that really gets me aggravated when people do that, because it's like, well, why didn't you do that? Or were you really supposed to do that? Anybody can look at a chart at the end of the day and say, gee, I wish I would have gone long on that gap down. Well, okay, now that you see the stock rally $4, everybody wishes they did. But was that really a good trade? And that's where I think so many people lose in trading, because they don't have a structure. They don't have a format. They just are always kind of, woulda, coulda, shoulda, wish I would have done that, should have done that, that looks good, that looks bad. And they never learn because they just do willy-nilly, and then some days they make some money, more days they lose a little money, and they never turn the corner. So with that introduction, I didn't want to talk a lot tonight. I just want to get right to these trades. So let's get right to the trades. How's that sound? Number 1, these are all from last week. This is PayPal. PayPal One of the reasons I picked it was because it was that morning, and there's a lot of people here that are in the trading room with me. So if I try to tell any little fibs, I think they'll call me out on it, or at least I would expect you guys to call me out on it. PayPal was an absolute favorite that morning, right? It was just an absolute number one, ding, 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 love it type of favorite. For every one of these trades, I'm going to show you first. There's two slides for every trade. First, this slide, which is kind of the overview, a couple of questions to answer. The entry, stop, profit criteria. The profit's based on a $500 risk that, naturally you can use whatever risk you feel appropriate from $10 to $2,000, whatever you want to use. And then on the next slide, I'm going to take and kind of walk you through what is the important part of every trade is kind of how the time frames came together to create this trade. And every trade may have some different time frames depending upon what was relevant. So I'm going to flop back and forth between those two slides a little bit so you're not confused. So on the 5-minute chart, this just gives you an overview of what I did. The entry is visually represented by that gray arrow. And the exits are kind of roughly represented by those gold stars. Looked like a fantastic trade when I did it, and of course I left 3 times the money on the table here. I'll talk about that. It was a favor for me because how did this come to be on my screen? Well, it came because of this. When I scan at night, I look at some intraday charts. I look at 300 intraday charts as well as about 800 daily charts. And when I looked at these intraday charts, this is one of the charts I saw right here, this 15-minute chart. And that's one of those that kind of, you're not seeing the whole rest of it, but that's enough. You can look at your own charts if you want. That's from the Tuesday of last week. And that's one of those that kind of makes my heart stop beating because it's like, wow, that's just can't wait for that tomorrow. And the next day, we had the stock gapping up a little bit. So from that chart there, that's what got my attention, why it was on the watch list for the next day. And then at the end of Tuesday's trading day, it looked like that. Obviously, a huge move. That little relevant area there, that base going in the next day, there's where we look to enter, and that was when it gapped up. Now that is something I call the little mini gap up. You'll see that on the next slide. It's not a big gap. It's not one you ever find on a scanner. It's like 20 cents on a $78 stock. It's hardly even noticeable, but that little gap did a lot. It was a powerful gap based on what it did to the chart. Those are the type of things I like to look for. The opposite of that is what a lot of traders look for. They look for really big gaps and they don't know what to do with them, or they're so big they're very imprecise. This was very precise. This is a $78 stock that I ended up giving, a 60-cent stop to, a 60-cent stop to the first minute of the trading day. That's awfully precise. And I want to make sure when I use the word precise, it's not to be confused with a tight stop. Tight stops are terrible. Tight stops stink. They make traders lose if you artificially are making a stop tight just to increase your reward to risk. That's how a lot of traders lose a lot of money. But if you happen to give something plenty of room, and after you give it plenty of room, it just so happens to be a really nice reward to risk, well, ding, 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 that's what you want to be doing. Am I going slow enough? Am I explaining things well enough that you can pick up whatever you want to pick up from this presentation? Are you following the slides? Are we good? Are you following along with what's going on here, the 2 slides? Go much faster. Reg, tell you what, you hang around, you log out, log in at 6 when I'm done, and I'll do the whole thing in about 60 seconds just for you, okay? So there's our 5-minute chart, and you don't learn a whole lot from that, right? You just big green 5-minute bar. And there's the relevant area in there, meaning there was the entry, and actually it was the targets too were taken inside that first 10 minutes, which is not what I like doing normally. And then to there's the relevant area. Now there's a 1-minute chart. So let's flip back real quick. You can see down here the entry, 78.30. If you look at this chart, I mean, you don't have horizontal lines going here, but you can see 78.31. That was awfully quick. That was awfully quick. Let me flip back here. The strategy was a 15-minute DTS breakout play. You should have seen that from the 15-minute chart. And the entry is on what I call a 1-minute secondary sign of strength. A couple of questions here. Why so quick on that entry? Why so quick on the entry? I'm going to ask questions, but I'm probably just going to answer it myself right away because we'll be here all night if I wait for answers all the time, but a couple I may leave for you. Why so quick on the entry? Well, because as you can see, a lot of these charts, if you don't get in early, you're never in. Yeah, but I mean, the thing is, you'll never get in them, right? Now, this one happened to give a second entry. This one you could have got in here, right? Now, notice you would have been entering about one whole day's profit above where I entered. Now, here's the thing. You don't always know it's going to do this. The reason sometimes you have to decide to make a fairly quick entry is because sometimes that's all you get. So a lot of times you do this, boom, boom, right? Just up and down, right? Yeah, the second entry, and actually it's one of the questions I was going to ask Mr. Jacks is why didn't I get back in again? And I'll explain that in just a second. So what I'd like to try and do is to grab some money and then let some go for the day. Now, this one ended up running, as you can see, what I call over a day's profit in 7 minutes or whatever time that was. It was 7 minutes. Now, that's not what I try and do. I want to really emphasize that I'm not like a scalper or trying to get in or out of something, but there's a rule that I have is when you hit a target you expect it to reach in 4 hours, when you hit it in 4 minutes, you just take the money and say thank you to the trading gods and move on. So I don't regret that. Taking it, that was fine. Obviously, this is a good trade. As you can see, it ran 3 times the distance after that. So I would have liked to held that back half. So maybe taking the second target up here, maybe I should have held off on that. But what I said at the time I did it, and I said to the room was, hey, I'm just going to get back in. So why didn't I get back in? Well, the only reason I didn't get back in because I went into 2 other trades before this one pulled back. It was a very nice morning. There were tons of stuff set up because you'll see a couple of these trades are from Tuesday. It was just a really nice day. There were so many things set up that day. I wish I could have spread them out throughout the entire week. It was beautiful. Or maybe left a couple for today. Management in hindsight, wish I would have, done a little better than that, of course. Was it a mistake at the time? Maybe the back half was. Maybe that back half should have just given a little bit more room, or just let it. What happens sometimes though, these quick trades in the morning, they just come right back in on you and you wish you would have taken it all. So I did take it, and like I said, the re-entry, I ended up doing other trades that worked out well, so no real regrets there. So that is PayPal based on a 15-minute breakout. Here's the other question I have for you. I will let you answer. You can see where I entered there. It was just seconds into the trading day. Not what did I use, but what concept, what are you looking to enter something that early? And this may not be for everybody. I don't really like fast trades like this either. No, I'm not aiming for, no, it's not a beat the tail, Reg. It's not even what it is. You should know that, of all people, too. I wasn't beating the tail there. But what time frame is really the one that is saying, I'm asking if you look at a chart like this, and I'm jumping in, not instantly, but almost instantly. What is the time frame that's really making my decision on that? No, not what time of day, but what chart is really making the decision for me to do that? Now, not really. Right, exactly, Jack. Yeah. The 1 minute is the thing that says, okay, I'll get in. But my point is that it's the 15-minute chart that I like so much with this little tiny gap that I've made up my mind that I'm not going to miss this trade. In other words, I'm trusting the 15-minute chart because I know from understanding charts that that's highly unlikely to back up once it gets going. So my real criteria is don't miss this trade, and then I look for what's called a secondary sign of strength that you don't even see on the 1 minute chart. I mean, put it this way, if I'm using the 1 minute chart, what was my entry? I got in right here. That's a 1 minute chart, right? That's as low as you go using minutes. What was my entry criteria? Well, it doesn't exist there, right? You can't even see it. It's inside of there. So that's my point, is that you have to have the confidence sometimes to know when you need to be aggressive to get in. Traders make 2 mistakes, and one is getting in when you shouldn't be getting in and constantly stopping out. But there's another mistake that I think is almost as deadly, and that's sitting there and missing great entries because you don't know you need to act quickly sometimes and not hesitate. If you hesitated on this one, look at this 1 minute chart. I mean, it's just gone. It runs a whole day profits in 6 or 7 minutes. Again, not my goal. I don't expect that. I expected to get there by 10:30 or something. That would have been great. But it happened to get there right away. So the knowledge, the confidence to be able to know. There's a saying out there, and maybe some of you have heard me refer to this, that says, missed money is better than lost money. Have you ever heard that saying? And what do you think of it? Missed money is better than lost money. A saying often taught to traders. What do you think of that? Yeah, it's not bad, guys. I mean, it's not bad. It's there's a purpose to it that I understand, and I've probably been heard to say it occasionally. Because new traders oftentimes are just too rambunctious. They're just out, shooting anything that moves, so to speak. And that can be a good saying for a new trader, right? If you're not sure, sit back and wait because your experience probably isn't that great and you probably are better off being more exact. But as you develop the mindset you should have, again, you shouldn't trade differently, but as you get better, it simply becomes the fact that you could lose more money waiting sometimes. Remember, if you take a trade and stop out, you lose your one risk unit, right? Whatever that is. If you miss a good trade, you could lose, whatever you make on average, or not on average, but on a good trade, like 3 Rs. The next couple trade are 3 R multiple trades. And if I sat there and lamented, I would have missed 3 Rs. Is it better to miss 3 Rs or lose 1 R? Many of you who know me know I don't ever get mad about a stop out, unless I did something wrong, of course. But any trade I thought was the right trade, even an aggressive trade, I don't get mad stopping out. I get mad missing good trades that I should have been in. I get much madder about that. So take that with a grain of salt if you're newer, because I don't want to encourage you to be aggressive if you're not sure what you're doing. Good. Would you like to move on to the next trade? An R a day keeps the JOB away. Shelby, there is a video that you should watch if you're even asking that question, because you haven't heard me talk much about it. It's on the free stuff page. It's actually one of the Hall of Fame videos. It's called From Chart Reader to Trader Investor. That talks about the mistake people make when they get good by trying to go for multiple R's instead of just increasing your R unit. So on average, you should average that. Maybe you asked the question, the goal. The goal is to average that 20 Rs a month. That's the goal, to average that. It doesn't mean you quit when you have 1 R, because you're going to have losing days. So you got to have some days where you rake in some money. And when you're hitting it right, and when you're not hitting it right, you keep it contained enough so that you can, do that by the end of the weekend of the month. All right, I'm going to move on. Next trade was from the same day, and it was CTIC. Now, I put CTIC in here because it was just, again, one of those faves, and that's what this is about, 4 favorite trades from the week. It was in the trade of the week also in here. So you may have seen this already, but the thing is, in the trade of the week, you see a quick video, blah, 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 3 minutes long, and you're done. Here is your opportunity to ask questions or anything else about it. So CTIC, again, was a favorite to me. There's some questions we're going to answer there. This had an add and reduce in it. Target management here was excellent because I actually took target 2 at the high of the day, which is, not even the goal really. Good management, and then I want to discuss with you a more technical question, whether I entered this late or not. Notice the other one I entered extremely quickly. This one I didn't quite as quickly. It looks late, and I want you to tell me if you think it was a mistake to enter that late. Let's take a quick look at all the charts, and I'll come back to this one again. Oh, and this, if you look down here carefully, see arrow, this is entry number 1, and these are the numbers for entry number 1, over 542, stop under 530. And then entry number 2 is there, the second arrow appears, and then the numbers change down here. Boom, boom, boom. And the total, of course, is for both of the trades added together. It was too tall to put it all on top of each other. So entry number 2 is at 945. So this is based, now this first chart here is a daily chart because this is based on a gap that day. You can see where it gapped. It didn't quite clear the prior day. I consider this to be a very bullish gap. I ended up entering, you can see there's our 5-minute chart now. I ended up entering where the silver arrow is, which was up there a ways. And it's something we'll talk about in just a second here. Boom. That's the 1-minute chart. And the entry came inside of this green bar, not above all this, but inside of this green bar on the way up. I didn't know it would sit there like that sideways. And when it sat like there sideways, then I ended up with the second entry over the tops of those little topping tails there. That was the add. And the time I added, the stop then came up to the lows of these bars right here, which made for a nice trade, and with some good targets, makes for a nice winner. Again, kind of a 3R trade in, what was it, 30 minutes or something? I think it was about 30 minutes, whatever it was. Yeah, an hour. Yeah, it was 30 minutes to the nice target, and then I dribbled it down a little bit for an hour before I got out. But the third target made less than the second target. So let's head back again and take a look at a couple of things. So here's the 5-minute chart as it played out throughout the day. So take a look. Let's go back here. So I entered, like it says right there. It already ran up a whole R unit, so to speak. Was that a late trade? Should I have jumped in earlier, like on the prior trade on PayPal? This is an educational question. And don't think it's not possible I entered late. I mean, I'm doing, looking at a bunch of stuff in the morning, fumbling like anybody else. And on top of everything else, I'm also trying to communicate with the room. And, I like a nice calm trading style, but when you have something that you know is going to move early, you have to decide to get on it. So, well, the order's not relevant at the minute, Jack. I talk about that at other times. On a very liquid stock like this, it doesn't matter. This is a super liquid stock. The market order works fine. It's not the best order to use when you want to get the fastest order, and that's something I talk about at the intro class for a while. But I don't mean with type order. I just mean, was that a late entry? I mean, you saw the entry on PayPal. I was just in the bottom 10th of that first bar, and here I'm in, at the end of the first bar. Was that late? Strategically speaking, do you think I goofed a little bit, or was that intentional? If it was intentional, why was it intentional? It's on the chart there. Some of you know your stuff a little bit. Yeah, good. Eric, Harold, correct. Yeah, see this gap, it can be very much what we call an either way gap. You notice this gap, it didn't clear that day. Now it doesn't have to clear. It doesn't really have to clear. On some charts, I wouldn't wait for it to clear. But this chart overall, when you look at it, because of the run for the prior days and the fact it didn't quite clear, I wanted to see that strength. Yeah, I wanted to see that strength. So this was an intentional delay. And really the entry could have been over that top. I think my entry was over this topping tail. But that's as fast as I could get in, as it turns out. So over that, was that right? No, that's the 5-minute chart. No, that's right. Inside of this 1-minute chart, it gave an entry that you can't see just looking at the 1-minute chart. And I want to, as I'm looking at these, I want to just kind of point out again that these first two trades were quick trades. 2 trades right off the rip, and it's not what I normally like doing, but we just happen to have 2 what I call tier 1 entries, meaning by tier 1 entry, I mean, without getting into the specifics of what you do, it means basically don't miss the trade. If it's going to move in your direction, you're not going to miss the trade. You're going to make sure you're in it. Tier 2 entry, in general, means that you really want to be in it, but it could do something that would not have you in it if it just kind of ran. Tier 1s means you're going to be in no matter what. Yeah. So what happened was and that may have been why I know I was a few cents later than I wanted to be. It was just a few cents, and it was because PayPal, if I remember right, PayPal was first, but it just set the order, and then once I set the order, I just do something else, and then it was onto this one. So CTIC. What else do we have to talk about here? Did I answer the questions here on the prior slide? It was add and reduce, high a day target, do good management, entry later. Okay, we did all that. Yeah, so this was, it's a fun day, Jack, because you've in 30 minutes you've got like a whole week's profit under your belt, and it's like fun. But it's been exceptionally true this last 2-3 weeks to me. If you guys notice in the room, it's kind of like it's heyday one day, and I'm either real quiet or lose a little the next day. It's kind of been either we have the setups or we don't, in my mind. I mean, for what I look for. Everybody's a little different what they like to see or what they like to look for. But this was the day we had just kind of stuff set up nice. And if you're saying I picked on a lucky day or something, I'll explain that in a minute too. All right, so CTIC done unless you have any questions. How does CTIC come? How does CTIC come on my screen? Well, in my prep, before the market, before 8 o'clock, it wasn't on my screen. This is on my screen because of the gap. So in addition to whatever review I do looking at some daily and hourly charts, which, like I said, takes about 20 minutes, I then also in the morning, of course, check the gap list. the gap list is another source of possible trades, and CTIC came 100% from the gap list that day because you can see that's a big gap. That's a what, five? That's a 30-cent gap on a $5 stock. That's big. And in this case, it was powerful. All right. So later that morning, there's a short. And what I want to point out here, one of the things is that this is a bullish day. I had two longs, this is a short. So this is just uniqueness. This is what I like. Just unique stocks doing their own thing. Maybe they care about the market, maybe they don't. But to me, you always have that little edge. I want to stop for a minute to reflect on that. I like trading the market sometimes, it's fine. And I know a lot of you do that primarily, and that's fine. But I think, and I have no reason to say this other than to try and help people, because it doesn't matter if you trade the market or not. But I personally feel that you lose a little edge by just trading the market, and that is that if I use the market as a bias, meaning bullish or bearish, and I trade around that, I could be wrong and still make money. And here's an example. Here's a stock that was falling on I'm saying Tuesday's a bullish market day, and just assuming it was, let me check, because we had all longs that day. Tuesday was, Tuesday was the 8th, right? That was okay. Yeah, it wasn't any big bullish day. I had a bullish bias that day. But if you have a bullish bias and you end up being wrong, you could still make money on a long trade if it has some uniqueness to it, right? So here's a trade that even though I had a bullish bias that day, I took short. And again, this was because of another gap that happened this day. This is on LYFT, and this is a much different looking gap. So here's the 5-minute chart. You can see the gap on here, a little overview slide. And this is what I call the tier 3 gap, entry on a 2-minute DTS sell setup on a secondary sign of weakness, excuse me. I have the 5-minute chart here, not the 2, because it really doesn't matter. I don't actually take my entries from the chart that's being referred to. It is what I call strategically a 2-minute sell setup. Strategically, you call it a 5-minute sell setup. It doesn't matter. My numbers for entry actually come from somewhere else, so you can call it whatever you want. And I always look at multiple time frames to look at this. So to me, it's a little oblivious whether you want to call it a 2-minute, 5-minute chart. It doesn't matter. And some of you have seen that they overlap. The concept is, what I always like to focus on is the picture of power. Why do you think this is moving lower? Well, I have a gap here, a moderately powerful gap I think should get the moving stock lower. What's the time frame of reference? Well, it depends how it sets up. In this case, it's the 2 to a 5-minute chart. And what's a great entry? I'll show you the entry here in a second. So again, this is 2 targets taken on this entry at around 10 o'clock. And these were kind of held most of the day. One exit at 13.98, that's a new time. That's 13.58, I believe, so just before 2 o'clock. And they all run pretty close to close. You can see them on here star-wise on the nice decline through here, and then the second one trailed out over something in here somewhere. Why wait on entry? So let's take a look at the time frames here. So here's the gap on the daily chart. So that's what got it on the list that day. This is a tier 3 gap, meaning not a lot of urgency here, don't necessarily love it. Notice that this stock did fall if you go to the 5-minute chart here. It did fall early. Let me clear that up there. It could have been something you could have done here, except I wouldn't. Why didn't I take an entry here? Why wouldn't I take an entry here? Why do I not consider it a mistake to enter anywhere in here? Anybody know the answer to that question? If you're in class with me, you know this probably like the back of your hand. Right, Eric, exactly. Yeah, the gap quality. I said right there on the slide, it's a tier 3 gap. Meaning I need a lot of confirmation. A tier 3 gap, generally speaking, I'm not going to chase it. Because of the way this set up, this was not necessarily something that was going to fall immediately. It could have rallied, it could have fallen. And the odds to me were such and this is why we study charts and technical analysis, so you can make the statement that I know the odds are that it's too good a chance this could rally back, and any aggressive short entry would be more likely to stop than not. That doesn't always necessarily mean you don't take the trade. Many times I'll say, I think it's more likely to rally than fall. I'll still take the short, because if the entry is fantastic, you could be making 4 times the money that you would losing it, and then that changes the parameters about whether you want to take the trade or not. So this is a pretty good gap, and looking where this rallied back, I don't think I was looking at it, and maybe could have been talked into doing that there somewhere as that fell out of that topping tail, but I wasn't looking at it anyhow. So even if I would have passed or would have not, you can't see everything on your screen all at once. So here's the next opportunity. I'm looking at my screen, and if you're wondering how it is I keep track of all this, well, it's simple. I do my watch list. As I said, I scan about 1,200 stocks and end up with a daily bullish list, a daily bearish list, and then an hourly chart list that could be either, they're bullish and bearish. I generally don't separate those. And then the next day I look at the gaps. And then when I take all these and kind of synthesize them with the room, we go through the opening half hour and I go through them all. And a lot of them I just kind of ignore. I don't like them anymore. And then the rest I end up putting on thumbnail charts. I have 2 monitors that are just thumbnail charts. And I have the thumbnail charts organized in a very methodical manner. The thumbnail charts are kind of organized so that I have 5 rows on each monitor like that. And it's kind of a neutral row and then a bearish on weakness, bearish on a rally, bullish on a pullback, bullish on strength. And then of course they're divided this way. And from left to right, it's kind of the hot list to the intermediate list to the back burner list. So I can just be able to glance at a chart, but where at open, they're 1-minute charts because what else are you going to look at? As the day goes on, I make them 2-minute, 3-minute, 4-minute, 5-minute. And by the time I'm at 5-minute, I'm getting bored, and then they probably go to 8-minute and then 15-minute, whatever it is. Just basically when chart starts to run off to the left, I go to the next time frame. So all that happened was I'm sitting here trading and doing whatever and probably telling some hilarious jokes to the room, and I look over and I go, oh, look at that. I have and this chart would have been on, what row would this chart have been in? Are the 5 choices I just gave you? 1, 2, 3, 4, 5. What row would that have been in? Quick quiz to see if anybody was listening or just sleeping. Wrong. Not 5. Not 3. Well, yeah. Well, this is actually 4 for me. 4 is weakness on a rally. 3 is the big rally. 3 is kind of the crazy one. Yeah. No, it's based on what I just said, Reg. It's based on the bottom row for me. And this is just organization. This is not teaching you charts. This is just how I am able to monitor a lot of stocks and tell funny jokes and still stay on top of it all day long. 5 means I want to short a stock, but I need weakness to short it. I need to see something weak. 4 means it's better to me. I like it weak so much, I even short it if it rallied somewhere. 3 Eric is kind of in between. Sometimes you're right, I put on 3, I put like the big rallies for later, like, really, like a gap up that I want to short an hour later or something like that. The 3 is kind of a miscellaneous row to me. But 4 is generally shorter rally. You don't need to know this. It's not going to help you trade. I'm just explaining how I look at a lot of things. So it's not based on tiers. No, it's based on what I want to see indirectly on tiers, but based on what I want to see in order to short. So I look over, I see this chart. All of a sudden, hey, guess what? Look at that. And then I come down to find my entry here. So this entry, and this is under 1149, stop over 1189, 50-cent stop, and boom. And notice with this one, is this the one? Let me go back. Yeah, notice, I mean, it dropped initially, right? So initially it had some profit in here. And at some point, I don't remember exactly, but at some point, I'm sure, I lowered the stop somewhat. Not like crazy, because I don't want to get out of these. I want to be with them. And notice here that I didn't take a profit till down here, right? So sitting here this whole time, just kind of waiting for it. Why? Well, because I felt this gap had a target down in this area somewhere and just was able to wait it out, if you will. And it could have taken some profit. It's possible if it would have come back on this one here, I would have made some money on this, but just a small amount on a trail stop somewhere. Why wait on entry? Unique, boom, boom, boom. I think I covered all that, right? That's helpful? Okay. Next is RBLX. And I learned tonight when I did this presentation that this is Roblox. I have no idea what that is. So this is a DTS Tier 2 gap. So 3 of these 4 trades, and now this is Thursday, so this is 2 days later. You notice that 3 of the 4 trades here were gaps, and that's because we're in the height of earnings season. So I don't do, obviously gaps are one of the things I like when there's good gaps, and when there's earnings season, you get a lot more gaps and a better chance to have something that's a gapping stock. So that's what we had here in RBLX as well. Now RBLX is interesting. I want you to kind of focus on the last one here on LYFT. This is kind of more what I like. It's kind of a 10 o'clock entry, sometimes a 9:35 entry, walk away. And by the way, where was I this whole time? Where was I this whole time? Yeah, actually, that wasn't a gym day for me. Thursday was. I was actually on a bike ride through trails through a forest preserve. Now, I'm not good at sitting on my hands because I tend to pull them out. I'm not heavy enough jacks to keep them underneath me. So I like to take off. Away from the monitor is the key, though. Yeah, away from the monitor. And because you know what, if you're not, you know what happens to anybody? You sit there and you're saying, oh man, I'm up a whole day's profit here, yada yada. Let me get my stop to right there, right? And oh, I'm out, and oh, I missed 2/3 of the trade now, right? So that just happens. And you have to keep your time frames in mind. What are we trying to do? It's a gap. I got a great entry. I think it makes it down to here somewhere. If I want to get it there, right, I can't be sitting there on a 1-minute chart at 2 o'clock in the afternoon nitpicking on every little bar that happens, right? So I bring that up because this is the type of trade I like to do. 10 o'clock entry, take your time, walk away, do something else, come back and collect the money. It doesn't work that way every day, but that's the goal. And I point that out because the first two trades I showed you were very early entry trades. One because it was a highly rated gap, and one because it was just a perfect chart that opened at a perfect spot. So it was a choice of either miss it or get it. So I got it. This next one here, I bring it up because this next one here is another really quick entry. And this is RBLX based on a tier 2 gap entry on a 1-minute secondary sign of weakness. And again, in here, anything, I don't know where some of you, if you've not been taught by me at DTS, I'm not sure where some of you would even call this entry, because you probably wouldn't know what to do with it because it's not an entry that you would normally see. If your thought process, or if you were taught in a way where you learn strategies and you have entries tied to those strategies, which is probably 99% of what's out there, I think that's a losing concept. You shouldn't have entries that are directly tied to strategy. You should have strategies, and then you should have different entry tools that you use depending upon a lot of different things. So I bring that up here because, again, this strategically I liked it a lot, and then the entry is what I call a 1-minute secondary sign of weakness. How do you know when to enter? Maybe not for everyone. Miss money, ... So here's the time frames on this. So this was the stock the day before the trade. I didn't reveal what happened that day. So this to me was a very bearish. Now I set this up. I put this on my watch list this day because this is a very bearish bar that broke prior lows on the daily. There are several prior lows here. So this is the first day to new lows. So I felt this is very bearish and wanted to maybe get it short the next day on like an hourly or 50-minute sell setup like that, right? So it is. Honestly, I'm not sure if I had saved that or if I just saw it gap in the next day and then said, ooh, I like that daily chart. But either way, it gapped up the next day. It gapped up to 33.40. So you can kind of see on here, that's right about in here. Do you see 33.40 in there approximately? Right in there. So that's where it gapped up to. And this is where we kind of picked up the term of a little pop and drop thing. When you gap up into a red bar like that, it's typical that you get some selling very quickly, very early on. So this was all set, again, right from, and this is on Thursday, and this is all set right at the open, saying, okay, just top tier 1 watch here for RBLX. And as soon as we got going here and jiggled back and forth a little bit, I picked an entry under 33.20. And you can see that, again, I think I was in this. We got in this. We got in this right in here, I think, on that third bar, I want to say. Might have been the second one. So we were in this already, which was good because when it dropped really quick. And if you waited for the low of the day, you might have maybe not got it because it dropped really quick. And that's one of those fun things. I'm looking at other stuff. I'm already in the trade and I look over and I got a whole day's profits. I didn't even realize. I was like, holy cow, what's going on here? So again, where do you where do you learn to get that entry? Well, the entry comes from knowing the chart to say this is something I don't want to miss. This is something when it opens like this and does this, I'm willing to say, you know what? I have great confidence that it's going to go lower from here, and I don't want to miss this. If you don't know this chart and you see this gap up, as a matter of fact, this has actually been taught in paid for classes as a long, and it's not. It's a ridiculous long. It's a short. So this, again, is kind of a favorite setup to me, and that's what all these trades were real favorite setups. The first one was just a beautiful 15-minute breakout on a mini gap. The next two were regular gap strategies, and this one, oh, what did I call this? I mislabeled this. I apologize. I copied that from another slide. This is not a tier 2 gap. This is a gap carry. It was a gap the prior day, and you expect the bullishness or bearishness from day one to follow through on day two, which actually is my favorite time frame for gaps. Is actually day two most of the time. Is playing the follow. We're going to have maybe some good ones tomorrow. We had, I don't know, Target. I never traded Target today. The best I could say is I avoided taking it short. I was looking at it short, which was the wrong direction as it turned out, but I never got into it. So there's RBLX. How do you know when to enter? Maybe not for everyone. And this is one of these. It's an example of missed money better than lost money. I look at, and if you listen to some of my videos, I talk about the three-legged stool of trading, where having superior knowledge of technical analysis is just one of the legs. And one of the things that I look at a lot as well is just the whole math and probabilities part of it. And that's why something like this, to me, I'd rather stop out of it than miss this trade. And you can see why. And that's the type of stuff I look for, where you have that little moment in time and you're able to find an entry that works. This is not the way most people trade, by the way. Now, I just want to add one other thing here real quick, is that, the point of today was to pick out 4 favorite trades. And actually throughout the week there were some losing trades as well. But I didn't just try to pick out winning trades and show them to you. It's easy to pick a few good trades, but there are several to choose from. That was last week. So there were, good trades. There's a few losing trades in there. As a matter of fact, Monday I lost money. And Tuesday was a real good day, as I told you. And Thursday, it's like every other day. It's Tuesday and Thursday were home run days. Friday made a little. Piton was a good trade. I could have showed you that one. There was one that I almost put in here. I like Marvell on Tuesday. And also, it's not like, oh, gee, there's a great week. Let's do a presentation or something. This is kind of planned. There's the 4 trades I picked. And notice something also, that I'm more of a bearish bias in general. I'd rather short rallies in a neutral market than go long. But notice down here, what I've been kind of putting on here is the long trades made almost 3 times the money the short trades did. They both made money. 17 trades over 5 days, so it's about 3 a day, right? Yeah. So it's about 3 a day that week. But again, this week is not all that special. I mean, the week before, week of the 31st, was a little better week, actually. But again, I want to point out, more than double the money long than short. The week before that, it was all long. I mean, short made a little bit of money. The week before that was about the same as the week prior to that one, but it was all long. And that's where that market bias comes into me. Because, if you've heard me talk at all, I've had kind of a bullish bias, at least for a period of time here. Since we hit that bottom 3 weeks ago, we've been back and forth, but the daily chart has maintained a bullish posture and made higher highs and higher lows. And whether that goes until today or 2 months from now is very difficult to tell. So we've got to just kind of take it a day at a time. And it's not been all that helpful that we've had all of the election interest rate thing, going on the last couple of weeks like crazy as well. But, day trading, you just find your unique stuff. You try and make sure that you get the good entries and you do what you want to be doing, and then you do a reasonable job managing it. And even though what I said just sounds like common sense and simple, it seems to elude a lot of people. Yes, they're not all winning days. Some days you get it wrong, or you just miss the good stuff. I lost today. I kind of a weird combination of kind of didn't have the right idea today, and then just kind of picked on the wrong stock here and there, missed a couple of good ones. And keep in mind, folks, there's always some luck involved. There's always luck involved in trading. And if anybody tells you it's not true, they're just an outright liar. You can't, there's luck in everything in life, right? Anything you do has some luck involved in it. So all you can do, though, is put yourself in a spot where luck can help you to some degree. I mean, obviously, if you're skillful, know what you're doing, you're going to have bad luck some days and lose. You're going to have good luck on some days and win. If you're skillful and know what you're doing, you're still going to screw up sometimes. But if you don't know what you're doing, good luck's not going to help you. You're still going to lose money, right? But on balance, if you know the charts and know what not to look at, you do well. Are there any questions? For those of you that are here and curious and you're not part of the room, I do encourage people very much to try day trading. I don't encourage you for everything. I don't encourage you to necessarily sign up to take seminar program if you're not ready for it. But day trading, you join the room for a month. It's not a big expense. You like it, you don't like it. It's not something to be afraid of, though. It's something that anyone can really do, and there's different styles and time frames. You don't have to, like I said, some of these trades today were a little more aggressive early. But a lot of stuff you don't have to be. A lot of stuff is more kind of later in the morning. I only trade the first hour basically, maybe till 11 o'clock on some days. I manage stuff the rest of the day. But I'm not there trading past the opening hour unless I say I'm going to come back. Today I was because I thought, I kind of thought we were going to bounce more today. We never did. That was part of my problem. But generally speaking, pretty much all the results from the room are done. I mean, 95% of that is from before 11 o'clock. And I think what's after 11 is probably just break even anyhow. That's why I don't do it, because I don't really clean up after 11 o'clock unless there's something really special going on, a certain stock that I think I want to wait for, or unless there is a market bias that I think is worth coming back to check on. If you're interested in finding out more about the room, that is a website that has all the detail. If you want to sign up for the room, at the bottom of that link, you'll find a spot that you can do that. I also want to mention, if you're interested in day trading and funds is an issue, there is a way that you can day trade with less than $25,000. If you email me, I can send you information on that. It may or may not be for everybody, but it is a way that you can do it legit, and you could be trading in a couple of days if you want to. I do encourage you, though, not to day trade at all if you don't have some money available somewhere, because it's not something you do out of desperation. It's something you should do to make some additional money with a clear head. If you email there, you can find out how you can do it. It's something, if you want to be, you can be trading in a couple of days, and you can start with as little as $5,000 and $50,000 buying power if that interests you. And finally, I probably will email this to everybody, but this was finally posted, the event from last week that got a lot of compliments, and also I think it was a very educational one too, especially the way the market turned out. It's available on the site here, and I'm probably going to email this to everybody because it came out so late. It's 2 weeks ago tonight, actually, was the prior event. So this one tonight hopefully will be out this weekend like it should be. And that's about it. I want to remind you all that are here just having fun kicking the tires to visit the free stuff page. If you click on either one of those prior links, you can just go to home and you can see the free stuff page there. And when you're at the free stuff page, if you're just overwhelmed with all the stuff there, because it is the greatest source of free information for traders, investors, anywhere, start at the Hall of Fame. If you scroll down the free stuff page, it starts out with Trading Week videos, and there's a couple of sections of educational videos and for newbies, and then there's the Hall of Fame, and then the prior events. So feel free to look through there. You could spend probably 2 weeks looking through all of the videos there. I am done. I'm done 5 minutes early because you guys did not have a lot of questions. I allowed some time for questions. Is there anything you want to go back and look at? Any questions on anything at all? It'd be embarrassing to finish 5 minutes early. I'm not sure how that happened. All right, well, we're going to end it a couple minutes early then, unbelievably. It could be the first time in history. So have a good night, everybody.